What's up, guys? Welcome back to the channel. Thanks for tuning in. In today's video, we got a special guest. His name is Nick Drakeon. He runs his own YouTube channel, and this guy is about to drop some alpha on us. Let's go ahead and break the ice, man. Tell me about yourself. What's your in real life job? What's your background? Fill us in.
Thanks for making the time, Drake. I appreciate it. My full-time activities for a few years have been investing my own capital. Started off in the equities markets, and now it's crypto. But just to kind of rewind, I'm in my 40s, my early 40s, so I've been doing this for about 20 years. While I was in uni, I got in the nightclub business, which is a completely different story all on its own. But while I was in the nightclub business, I started playing poker in these private games with these colorful characters in the nightclub scene in Sydney. And, kind of really enjoyed the game. But I quickly worked out that these people had too much money and they didn't know what they were doing. So I spent a lot of time learning how to play the game properly. At the same time, you were able to start playing poker online, probably about 2002, 2003 at this stage. So because I had this opportunity to make this ton of money in these games, I became quite good at it by practicing online. Then poker becomes really big. Some accountant won the World Series of Poker in 2004, Chris Moneymaker. All of a sudden, it's all over TV and everyone wants to play poker. And I and a few of my friends were some of the few people that actually knew what they were doing. So we had a head start. So I dropped out of law school at that point. I was in my last year of law school in Sydney and started playing poker online full time. So that was a really good education, just traveled around the world, met a lot of interesting people, but more importantly, it gave me a basis to kind of make decisions quickly with incomplete information, learn how to manage a bankroll, learn how to manage emotions, try and understand who's lying, who's not lying, and what kind of situations to avoid. So this skill set is very analogous to the skill set you need to become a good investor. I'm very entrepreneurial at heart. So while I was doing that, I created a few businesses in the poker space, and that kind of went on for a while. Had a very good time. If you're in your 20s, you're playing cards full time, traveling the world. It was an interesting time. The US government passed some legislation in the late 2000s that kind of ended that party. So I exited the space around 2010. And then I started looking for the next thing to do. I decided that e-commerce was very interesting. It was very early. No one was selling too much online in Australia around about 2010. So I set up a supply chain, bringing in products from China and selling them online in Australia. So that was kind of, my business activity at that point. And I became a business operator. Around about 2012 or 13, and this relates to crypto, which is the reason we're here, a lot of Bitcoin casinos and Bitcoin poker rooms started popping up online. And the reason for that is it's very difficult to move money around the world as a gambler or a poker player. Banks don't like it. It's difficult to carry large amounts of cash around with you when you're traveling. So Bitcoin, interestingly, had one of its first use cases, apart from the Silk Road kind of situation, but one of the first real use cases in terms of facilitating the movement of money around the world in the poker scene. And that's when I first became exposed to Bitcoin. Some people owed me money and they said, "Hey, I'll pay you in Bitcoin." I said, "Yeah, sure, whatever." I'd already written it off. So that was my first exposure to it. So I knew what it was, hadn't read the white paper, didn't understand what problems it solved, other than it was a digital form of money, and these people wanted to send it to me. So we kind of fast forward a little bit, ran the e-commerce businesses, took some outside investment, ended up selling that business to private equity in 2017. But I became very entrenched in running businesses, advising businesses. I sat on a few boards. I invested in the private markets and naturally in the public markets as well. So I spent a lot of my time researching business models, understanding how to analyze businesses, and both from an investment standpoint, but an operational standpoint. In 2017, after I sold that business, we had a big run up in Bitcoin. And I had a bunch of it because all these people had been sending it to me for years and I hadn't sold any. So I started paying attention. And because I'd spent so much time analyzing businesses and business models, I started looking into all these ICOs. And you know, it didn't take too much work to work out that a lot of these things were just full of hot air. So at this point, I've got all this Bitcoin, it's all run up and it's predicated on all of this money being pumped into the system, retail money in the form of these ICOs, which I felt were completely full of hot air. So in order to hedge my Bitcoin position, which I didn't want to lose because maybe it becomes a thing, I still didn't fully understand it, by the way, and I'm not ashamed to say it. I basically shorted everything I could that wasn't Bitcoin or ETH at the end of 2017, just to protect, you know, this Bitcoin position that I had because I wasn't sure. And that worked out all right. And then I kind of forgot about it again and you know, moved to Europe and just invested in some businesses and managed my money. Then around about mid 2019, some really smart people that I know in the hedge fund world and that run institutional money started talking to me about Bitcoin and the things that it could do in the changing macro environment. All the things that most people kind of understand now. Very few people were talking about it at around, you know, mid 2019. It's before all the, you know, the hedge fund managers and things like that got on CNBC talking about Bitcoin as an inflation hedge and as, you know, protection from asset forfeiture and all these other things. So it started becoming interesting. I had a bunch of time on my hands and I read the white paper multiple times because I didn't understand it the first few times. And I went down the rabbit hole of what is this from a technological standpoint. And you know, it probably took me 3 or 4 months, you know, because all of these things were very foreign to me. I'm not a technical guy. I understand P&L statements, balance sheets, cash flow statements, etc. You know, all of these concepts and these problems from a technological standpoint that Bitcoin solved were very new to me. So it took me a while to get there. But once I got there, we get to kind of the end of 2019 and I'm like, this thing's going to change the world. And certain things, if certain things happen, it would, you know, go up very, very quickly. And it had already gone from like, I don't know, 5,000 or 6,000 up to almost 20,000 at that point, if I recall correctly. And so I started buying some, but not a lot because I didn't have a lot of conviction. Then COVID happened. Everything kind of crashed. And now some of the bull, you know, some of the bull thesis around Bitcoin actually happened, right? Which is you've got a shock to the system. Government, worldwide governments are going to start airdropping money, printing money to kind of save the world from this exogenous shock in the form of COVID. So, you know, knowing what I knew about markets and understanding how capital flows in and out, when COVID happened, it became very, very obvious that the equities markets and everything was just going to rip. And I think Bitcoin at that point ended up at about 5,000 or 6,000. And the reasons for the equity markets to rip were very similar for Bitcoin to rip. So I bought a bunch of both because at that point I understood the fundamental thesis around why Bitcoin was a thing. And it wasn't just this novelty that a fringe segment of society happened to be interested in, or, you know, some kind of fringe technological segment of society understood. Now it made sense in the real world, right? And all of these things, you know, I'm sure you've researched and they're kind of well documented now. But at that point, it was playing out in real time. Then DeFi summer happens, and now it's not just Bitcoin, which you kind of buy and hold and, you know, hope that you've got something left when the world kind of implodes. Now you've got things being built on top of Ethereum, which start to replicate some of the tools that we've got in traditional finance. You can borrow, you can lend, you can hedge, you can earn yield. Now it becomes interesting. So I go down that rabbit hole and really dive into everything related to investing in crypto assets, which was good timing because at the time, the equities markets was at an all-time high. And the S&P was trading at a ridiculous earnings multiple. So sure, you can pick winners and losers, you know, in the equities markets at that point, but that's really, really hard. But trying to invest in the crypto markets at that point was really, really easy. There's information asymmetry. You can jump on Discord, talk to the founder. Like there was ways to get information that we just can't do in the public equity markets. And then we kind of all know how that played out over the course of 2021. And that's how I have moved, almost all my focus from everything else that I've been doing to focusing on investing in and trading crypto assets. So that's kind of a long-winded way of how we ended up here.
It's interesting. No, that's awesome. So TLDR kind of started with a poker background, serial entrepreneur style, moved into e-commerce, online stuff. And then you kind of got enticed by the Bitcoin story. And being that you had some and you made a bunch of money with it, you're like, it's kind of interesting. So you kind of went down that rabbit hole. No, that's pretty awesome. So I guess
let me make one point on that. Right now, if you just think about that story, and by the way, there's a lot of people on crypto Twitter and people that are heavily engrossed in the crypto space now that have a very similar trajectory, right? And if you think about that, poker in 2002, e-commerce in 2009, 2010, and then crypto 2017, 18, 19, early, right? And that's not to say that I have a crystal ball and I can predict the future. I just happen to be in the right place at the right time. But the point is this: if you're in an industry or a space that's growing exponentially, like poker was in the early 2000s, like e-commerce was 10 or 12 years ago, and like crypto was 2 or 3 years ago, you don't need to be very, very good to make a lot of money, right?
Kind of, throw a dart.
Yeah, obviously there's a spectrum of returns, right? But the idea is that a rising tide lifts all boats. So my kind of advice to people that say, hey, where should I spend my time, is you go to the place where you think there is going to be the highest rate of change of growth in the macro of that space, right? You don't need to get every little detail right. Get in the right game and then you work it out. So when you see these opportunities that look like they're about to be huge, and you're not sure, you can place bets there either with your time or with your capital that just have huge asymmetric bet, risk reward profiles. And it's important to try and, zoom out and realize when those moments in time happen so that you can recognize them again. I digress. Back to you.
That's really important. Because especially with this type of industry, you can't ever win if you don't ever throw that dart. But it's a really good point, getting into an industry and being exposed to or playing in a game where the target is the biggest. Whereas opposed to something that everyone already knows about, you're aiming for a small target. However, if you go for something that's exponential growth, you could throw this dart and it's like throwing it into the ocean. Eventually it's going to get there and you'll just get a piece of it. Just depends how far.
And I'll give you a data point. Like, you've got all this information right now online about e-commerce and drop shipping and how to use the Facebook ad pool to, get a return on your investment. When we first started with Facebook ads in 2010, right, our return was X. And then that return on every dollar that you'd spend in the ad pool, right, eroded over time in a very predictable way. And the reason is that whatever edge you had in 2010 was competed away by other market participants that also started e-commerce stores and also started drop shipping. The same thing in poker, right? In 2003, 2004, you didn't have to be very good, and I wasn't very good to make a lot of money. But over time, education came out, information came out, it was on TV, people that knew what they were talking about started discussing strategies, and people get better. So that happens in every industry, and it's happening right now in crypto, where, kind of throwing a dart and hoping for the best on, on whatever token happens to pop out isn't going to work. But it can work in subsets of that industry. But back to you.
Yeah, no, that's a really good point. I want to kind of end the little segment where you started, how you got into crypto, with what are your goals in crypto? Is your goal to make a space or make a name in crypto, or are you just kind of like riding the wave?
Look, the ultimate goal is to increase my capital base, make money, right?
Okay.
That's the ultimate goal. But on the way there, there are certain kind of paths that you can take, right? Now, and in my opinion, regardless of what they say, everyone in the space, whether they're building a protocol or whether they're an educator or whether they're a speculator, they all have the same final outcome, right? They want to make money. They want to live a comfortable life. Now, some people take a path where that is very predatory and it is, kind of short-term focused. Maybe they rug, whatever it is, right? But that's one way of doing it. My approach is that the path of least resistance to me making as much money as I can is to immerse myself in the space and learn as much as I can as quickly as I can. And that's not because, for some altruistic reason or ideological reason. It's because I've seen this kind of movie before, right? In different spaces as they've developed over the last 20 years, since I've been old enough to understand, is that, it's a very nascent space and it has the potential to really transform almost every industry around the world, right? It's very rare that you have something that has that characteristic, right? There is literally no limitation to how big crypto can get. Its tentacles can go into everything. So in that context, this is not a 5 or 10 year story, right? It is a multi-decade story as this technology is built and as it starts being deployed and implemented and infiltrates all parts of our lives, whether it's, finding yield on your US dollars that exceeds what you can get in a bank, which seems to be something we've worked out, or whether it's tokenizing real estate and having it intertwined with government systems, which is something we haven't worked out. So in that context, when you've got this kind of 10, 20, 30 year expansion of an industry, when you're in the first 2 or 3 years of it, which this is what I characterize where we are, forget about 2010 to 2017, right? That was a very, very small segment of the economy. This thing only became quite serious and mainstream and part of the conversation, probably post 2017, and some might say, post COVID. But in any event, we are very, very early. So my approach is, I'm going to participate and try and make money along the way, but I'm disproportionately focusing on and spending my time on learning and understanding how the technology works, the business models that are attached to that technology, right? Understanding the players and networking with some of these people. I truly believe some of the people that, you've got on the podcast and I've got on my show and we talk to in Instagram, on Discord and on Twitter, I really believe some of these people are going to be the masters of the universe in the next 5 to 7 years. And you can just ping them right now and talk to them, right? You won't be able to do that later on, okay? So what I'm trying to do is take that approach in that I want to upskill myself, learn as much as I can, and build a network of sharp, smart individuals that can help me get there faster. And the reason for that is I don't think the big opportunities have presented themselves yet, right? I think they will present themselves at some point in the future, and there'll be waves of this thing. So what I want to make sure I can do is to be in a position when those waves happen to be very, very early and make huge bets that are going to be home runs. And I can't do that if I don't understand at a very intimate level all the things that are at play. And if you can do that, whatever money you make now or in next year is kind of irrelevant, right? Because if you're in a position to, be very, very early on the next, crypto Facebook or the next crypto Google or the next, whatever it is, right? We will be presented with that opportunity. So what I'm trying to do is turn myself into a very dangerous human being from a knowledge standpoint, so that with all the information coming in and all these projects being launched, I can, distinguish the noise from the true quality projects that may have a chance to be a winner, and then deploy capital there. So I don't care if I make money or lose money in the short term, especially because I'm sitting on very large gains, just because I kind of got lucky over the last decade. But the idea is get in there and play around, make bets, don't get hurt. But the ultimate goal in the short term should be to acquire the knowledge necessary so that when the next big thing pops up, you're one of the first checks in.
That's a good point. So, I mean, yeah, I normally call it the cost of tuition, especially when people lose money. It's like, look, just like you pay to go to college, it's the same thing for crypto. You have to pay to learn in this space, but eventually you graduate and you become what you call a expert in the industry, or at least well-versed. So with what you were saying, what projects are you currently looking at? Are you just a Bitcoin and ETH maxi, or are you like, what's your position, and do you even like ETH?
Yeah, so there's a few questions there. So the first thing is, I'm not a maxi of anything. I believe the world's a very complex place. I believe that there are more than enough problems that need to be solved, and different solutions or blockchains or protocols are going to find ways to participate in what's coming next. I think Bitcoin has its place. I think Ethereum has its place. I think layer ones have their place. I think layer twos have their place. So, going back to my previous point, I'm not about picking winners and losers today. I don't think anybody knows who the winners and losers are today, right? To the Bitcoin maxis, they believe they've found the winner, but they don't know, right? Something may come out that's better. I don't know if it will or if it won't. Same with Ethereum and all these other things. So I think it's very, very difficult, over a tail duration, to pick one thing and say this is going to win out of everything else at this point in time, where we don't have enough information. We don't know what the regulatory framework looks like. There could be regulation that comes out, in the next 3 months that basically says ETH is an unregulated security, and we're going to outlaw it. And anyone, you don't know. So I think from that standpoint, my approach is I want to learn as much as I can about as many things as possible, so that I have the information necessary to make real-time decisions as information comes out. Now, Bitcoin and ETH are two very, very different things. Bitcoin has proven itself, and we won't go into it's been very well documented what Bitcoin does as a store of wealth, the decentralization characteristics of it, the fact that it's gone through so many, moments in time where it could have failed, and almost did, but it hasn't. So it's just, really proven itself to be a resilient store of value. Okay. There's no yield associated to it. There's no cash flows. I believe it can't be seized. I believe that there's things that can happen that can make it difficult to on-ramp off it. But I think for the most part, Bitcoin has fulfilled its promise as a store of value. And I treat it as such. So I own Bitcoin passively. It's not something that I trade very actively. When I do see an opportunity, I'll make a bet. But I treat it the same way that I would treat other assets in my portfolio that I own, whether they're securities or not. I treat it as something where I can store wealth and know that it serves a purpose in my portfolio, as equities do, as certain debt instruments do, as real estate does. So I treat it as an asset class in itself. Ethereum is something completely different, right? Ethereum is, I would kind of class it like everyone makes this analogy, but let's say that you call Bitcoin digital gold, right? And then you call Ethereum, some form of the equity market, right? It is rails that allows businesses to be built on and activity to be conducted, right? So those two things are very, very different. In a macro sense, right? You want to own more of the thing where business activity happens on than you do the gold, right? If you think about, portfolio construction, no one has ever said you should own 80% gold and 20% the equity market or Amazon or Facebook or anything like that. It's the opposite, right? You want the majority of your portfolio to be in assets or in activities that has the potential to grow exponentially over time, right? So I view those two things very, very differently. Now, I don't own any ETH. I sold all my ETH somewhere between 3,500 and 4,000. And the reason I don't own any ETH is not because I'm bearish. I just explained that, it has the potential to be the rails that all digital activity and business activity runs off. That's a tremendous opportunity. But the reason that I sold it all, again, is not because I'm bearish. It is because of uncertainty that I have around, the technical limitations around ETH becoming effectively useless from an activity standpoint over the last 12 months, right? The gas fees skyrocketed. It became basically, useless for most people to conduct any kind of business on. And obviously there's plans to fix that. We're talking about the merge. So my view from an investment and a trading standpoint was this. I've got this asset. If they can fix the tech and the merge works and it all rolls out the way that they tell us it's going to roll out, this thing is going to be the alpha asset, right? It is going to be the one thing that you want to own amongst everything else because it's the rails that everything is going to work off, right? And at that point, if the merge works and all these things play out as described, then ETH is going to 20K or 30K or 50K or whatever, right? The prophecy will be fulfilled. Okay, so that's one outcome. Everything goes rosy and ETH goes kaboom. Another outcome is that the merge takes a lot longer than what we've been told. And it eventually works, right? Let's say it's already been delayed multiple times. So let's say it takes a year or a year and a half or 2 years. And then it works and it goes kaboom. Great. That's outcome number 2. Outcome number 3 is it doesn't work. And they spin their wheels for years and activity moves to other chains and the world goes on, right? And it stays this thing that never really fulfilled its promise. So that's outcome number 3. Now, I'm not smart enough to understand the technical nature of which of those outcomes are more likely. So my view as a trader is this: because outcome number 1, which is everything's rosy and ETH goes boom on schedule, and outcome number 2, which is it takes a couple of years and then it goes boom, means that I don't care if I buy ETH at $2,000, $3,000, $4,000, $5,000, or even $6,000. I don't care because it's going wherever the hell it's going to go, which is a lot higher. So, not owning any is a function of, I don't want to hold it and wait. On the day that the merge is live and it all works, let's say Ethereum triples on that day. It might not triple. It might double. It might go up 25%. Let's say it triples. I'll buy it because at that point, I'm not guessing. It'll go from whatever it is on that day to the moon. So
that's a really good point.
Yeah. So, I don't understand holding it right now and waiting to see what happens. Now, this was, I had very high conviction in this play when ETH was at 4,000 because the market cap of ETH, kind of computed, in my mind anyway, and, we can debate all day how to value Ethereum and the Ethereum network. I don't think anyone knows. But in my mind, that was a rich market cap at that point, considering the risks associated with the merge. Now, that calculus changes at where it is today, which is what, 1,900 or 2,000, which is half, right? So maybe at this point, it makes sense having a little bit, and I'm considering that. But the general, kind of idea behind not having any ETH right now is I'm happy to wait and see. And if they pull it off and it happens, I'm going to buy it hand over fist at whatever price it happens to be once it's been de-risked. I'm happy to pay that premium because I view the upside from there to be huge, right? If we're to believe all the ETH maxes, this thing should change the world. I kind of, it is a fantastic asset if they can solve these issues. So that's my view. I'm happy to pay up when I know that these exogenous risks have been mitigated to a certain extent.
Yeah, those are some really good points, Nick. A quick question though. What if we're looking at Ethereum the wrong way? And the reason I say this is I phrase it like this. You mentioned to me the promise of Bitcoin was being a digital gold, whereas the original thesis on Bitcoin was being digital cash, and it failed at that. Gas fees, and it just wasn't efficient. However, the new concept and new idea of digital gold was able to take adoption and do really well. What if we're looking at Ethereum wrong in that it's a transaction platform? What if it's a settlement layer or a better form of digital gold? And what I mean by this has to do with sustainability. The Bitcoin miners, when they function, in order for them to mine, they must have rewards in order to pay for their expenses. However, if there are no Bitcoin mining rewards, like the additional Bitcoin mining block from the inflation, when that ends, if that's being paid off by transaction fees, well, if it's digital gold, I don't take my digital gold and transact with that. I just don't. So there would theoretically be no transaction fees. Yes, I've heard the argument that the government or a state may take over Bitcoin and compensate and say, hey, look, we'll pay the miners, yada, yada, yada. But the government already doesn't like it. Like the United States just does not like Bitcoin. However, with Ethereum, they do have that programmed in inflation rate. And if there are enough transactions, which in theory, if it does become a settlement layer, yes, it is expensive. But if you create a settlement layer for the most important transactions, like transacting with the deed or transacting like on Visa, if they're settling their batches for each day for each merchant, that type of thing. What are your thoughts on that thesis that we're looking at Ethereum in the wrong way, whether or not it goes to ETH 2.0 or not?
Yeah, I mean, here's the thing. All of that is true, right? I don't, view it within that, from that lens, Drake. Like, there's a lot of if, and here's the point, right? We don't know, and the way that I view things is I don't need to make a bet today for what happens in the next 7 years, right? I can make decisions in real time as information presents itself, right? So as some of these things that you mentioned, specifically on the ETH side, start to play out, right? Then I reserve the right to buy ETH at any price on that given day. Everyone a lot of people get pigeonholed into this view that they need to take a very rigid stance on what the world looks like in 3, 4, 5, 6 years.
Right.
You don't have to, right? I certainly don't. Your points around Bitcoin are very salient, right? I had a look at some charts yesterday. Bitcoin has some long-term structural issues around what happens. It's basically a no-fee network, in terms of the fees that are generated to sustain the network. There's problems once those mining rewards, run out, but that's not in the next couple of years. It's, you know what I mean? So as these things come out and as these things kind of develop and new information comes out and new analysis comes out, as investors, we all reserve the right to pivot our position and change our allocations, right? And that's the beauty of being an investor, and why I don't understand a lot of, the maximalism kind of, I can't even say the word properly, kind of frame of mind, because
you're a true maxi.
It is so, capital inefficient, right? You don't need to grab your funds and lock it up in a vault for the next 12 years and decide what happens today in 12 years. You don't need to do that. You can press a button and go in and out of these assets as you see fit. Right. So for me, as I said, I think there are fantastic, there's a fantastic story for Bitcoin on the upside, and an equally fantastic story for ETH on the upside. But they both have risks. And at any moment in time, what I'm trying to do is assess that risk and make bets accordingly. And I reserve the right to change my mind at any given point, and I do so very, very frequently. And it'll be very interesting to see how these things play out. We've been told that the ETH merge is going to happen at some point in August, right? I hope it does. I'll be the first one in the market buying. But, if it doesn't and it gets pushed to December, right? And it's trading at $1,500 at that point, well, it's a better buy then, right? So what I'm trying to say is, markets are fluid, and as investors, we should be as well. These debates around what happens in the future are fantastic, but I treat them as knowledge, and then, I build kind of different outcomes that I think might occur. I try and assign probabilities to those outcomes. And this is all arbitrary, right? I don't know what the probability the merge happens or doesn't happen. So it's a lot of guesswork, but that's the game. Make tough decisions with your own capital, with incomplete information, and reserve the right to change your mind often and frequently. It's effectively playing a poker hand, right? I might start off the hand thinking you have X, Y, but by the end of the hand, I think you've got something completely different, and I just fold my hand, because information starts to seep through the cracks as you move along that graph.
That's really important. That's a good point. Keeping an open mind, especially when things develop and change. I like that.
Yeah.
So in general, what are your current thoughts on the market? Are you bullish? Are you bearish? Are you buying? Are you selling? Like, do you think it's going to dip more? What are your thoughts?
Well, look, there are multiple markets, right? Now, a lot of us thought that the crypto market would diverge from the traditional financial markets in 2022 as use cases and real economic activity started to play out on all of these layer ones and the ETH merge and all these things, right? We thought, and I did as well, that a new asset class and a new, bucket of assets would emerge that would trade on their own merits, right? And that didn't happen, right? In fact, the crypto market decoupled from the traditional financial market the other way. It dropped more, right? Than if you think about the crypto market in its entirety and an aggregate. Everyone says, okay, Bitcoin's only down 40% and ETH's only down 40%. But as an aggregate, the crypto market went down even more. So now, well, I'm bearish, right? And I'm bearish the crypto market for a very simple reason. And we can debate this for days. But in a very simple kind of framing, when you're in a macro environment of rising rates, okay? So well, let me go a step further back. When you're in a macro environment of zero rates, right? You have tremendous amounts of capital around the world, from institutions all the way down to people like me, who I classify as retail, in terms of where they're going to put their money, right? You can't put it in the bank because you're not making anything. Okay. You don't want to put it in equities because they're at all-time highs, right? And you don't want to buy, right now, let me just have a look, right? Right now you can buy Apple at 22 times earnings. You can buy Google at 20 times earnings, right? 6 months ago, that was 2x, so you don't want to buy Apple at 50 times earnings, right? You don't want to put your money in the bank, and you don't want to buy bonds because there's no yield, right? So you're kind of looking for places to earn a yield so that you can outpace inflation, so that your net worth doesn't deteriorate over time. And the crypto market was one of those alternatives, or one of the few alternatives over the last year and a half. Once interest rates start going up, which they have, now you've got capital, right, that has more options apart from crypto. The equities markets has been crushed, right? Growth stocks and tech companies that are good businesses are trading 50, 60, 70% off their highs, right? So you might look at the price of Shopify if you're an e-commerce merchant and go, I know this business. I know these guys are going to keep making money. And you're going to be like, okay, do I want to buy Bitcoin at 30,000 or ETH at 2,000 before the merge and gamble on that? Or do I just want to buy Google at 19 times earnings or Shopify, right? Or whatever, I'm only throwing these names out there as an example. I'm not necessarily saying I like them or I dislike them, but it's to illustrate the point that, capital has a lot more options today than they did 6 months ago in terms of where to allocate capital, right? In a much, more familiar and to a certain extent less volatile, well, definitely less volatile, but to a certain extent less risky bucket of assets, right? And this isn't just, institutions and pension funds and sovereign wealth funds. It's people like you and I, right? I bought a ton of Shopify, right? Because I know the business very, very well. And I've always owned it. And the amount of capital that I used to buy Shopify, may have gone into the crypto market under other circumstances. So I think when you think about the markets in aggregate, it's just capital rotating from one asset class to another. So because the equity market is trading at a favorable valuation, and there are a lot of companies that are undervalued and great businesses and fantastic investments today, right? You're going to see the crypto market, in my opinion, remain under pressure, right? As capital kind of shifts around and we work out what's going to happen over time. In addition to that, if you think about what's happened in the last 6 to 9 months in the world, and the current, kind of geopolitical even, US politics and if you think about the world we live in right now and the things that have happened, there's a war going on, right? The pieces of the chess puzzle being moved around in terms of shifting geopolitical power from Russia and China. Like there are all these games being played at pay grades that we're not privy to, right? All of this is extremely, extremely, risky to markets. It's instability and it's uncertainty, right? So that happened. You've got public companies that have Bitcoin on their balance sheet. You have, sovereign nations that are buying Bitcoin. You have all of these kind of data points. You've got inflation at 10%, right? Depending on how you calculate it, inflation could actually be around 15%.
Oh,
right?
Yeah, they're definitely suppressing it right now.
So that, but by any measure, is hyperinflationary crisis level inflation, right? And if you think about the bull case for Bitcoin, right? Before I get to that, you have governments around the world exercising the powers that we gave them during COVID to seize people's money, right? You've got sanctions, you've got Russian citizens that have nothing to do with the war that have their bank accounts frozen and they can't shift money around the world. You've got their businesses shut down. You've got, protesters in Canada that got their bank accounts frozen, right? You've got all of these things that we were told were going to happen, right? From, the Bitcoin OGs over the last decade. They're happening. It's actually happening. Bitcoin's at 28,000, 29,000, 30,000, right? I remember a year ago when, Michael Saylor said he's going to buy Bitcoin, jumps 5%. Elon Musk tweets about Bitcoin, jumps 3% in a day. You'd see these huge upward kind of violent moves on relatively no news. Yeah. A war with Russia is not no news, right? Normal citizens in Canada having their bank accounts frozen because they donated to Nick or Drake is not no news, right? All of these things that we're currently living through should theoretically have Bitcoin trading a lot higher than where it is, but it's not. So that's not to mean that the thesis is broken or anything like that, but it has a lot to do with capital flows and it has a lot to do with the market being a lot more efficient. You've got a lot of market makers and a lot of institutions that are in there, kind of playing around with what's going on. So I'm bearish in the short term because of, market structure reasons, because of capital flow reasons, and because I'm not quite certain why Bitcoin hasn't performed better than it has, in the world that we live in. Because, I mean, what needs to happen that's worse than what's already happening for Bitcoin to jump 10% in a day, right? And maybe it's just because there's more market participants and it's a more efficient market right now and a little bit more liquid. But I think, there's a lot going on under the surface. But ultimately, I think, it is going to be a period of 6 months where there'll be a cleansing, right? A lot of these projects that shouldn't have been launched and that shouldn't have raised a lot of this money, they're going to disappear. A lot of the frauds are going to be exposed. We got high on our own supply, not just in the crypto market, by the way, in the venture capital markets, in the public markets, in the private markets. The whole world kind of, put a bid under all of these asset classes because money was so cheap and governments around the world started handing out money. Here's the thing that I would say on that. That's a moment in time. That is an abnormal situation. It's been very few times in history where that's happened before. And that is now starting to normalize with interest rates going up. What we were seeing over the last 12 to 18 months is not normal, right? And the point was made a couple of days ago, I don't remember by who, but the point was that, I think it was Bill Gurley, actually, venture capitalist from Benchmark, one of the best investors in the world. But I think what he said was, ignore and forget the all-time high value of any asset that you owned over the last 18 months. It was an illusion. It wasn't real. You're never going to get there again over the medium term. That is just not a thing, whether it's in the public equity markets, whether it's in the private markets, or whether it's in the DeFi, kind of layer one type, markets. I mean, these valuations got insane. So his advice and his suggestion was that was an aberration. And I agree with him. So I think what's happening now is healthy for markets. I think what was happening over the last 18 months was not healthy for markets, but we can't help but participate. You can't sit there and short the market when governments around the world are handing out money. You ride the wave and you exercise, risk management. I haven't really talked about this too much, but, I run long short portfolios. So for people that don't understand what that is, whenever I hold an asset, let's say I hold, a position in Shopify, I will take a short position in another company that I think is a relative loser to Shopify. So what I end up having, and this is a very simplistic way of explaining it, it's not as simple. There's a lot of math that goes behind constructing these portfolios. But effectively, if I'm long a company and I'm short another company that happens to be in the same industry, right? Effectively, I've hedged out the market risk. So if the market goes down, the one that I'm short is going to go down and I'll lose money on the long, but I'll make money on the short, and vice versa in an up market. And this is how professional investors operate, right? There's very few long only funds that have made, that have performed well over any tail duration, because it's too difficult to predict market direction over a sustained period of time. So, in that context, you need to pick winners and losers, whether it's companies in the private equity markets or whether it's tokens in the crypto market. So people like me, we kind of try and make money whether the market goes up or whether the market goes down. Now, if the market goes up in a straight line, like it did over the last 18 months, someone that was 100% long is going to make more money than me without question. But they also just got wiped out, right? So to kind of circle back to your original question about how I view the markets today, I am bearish on crypto for the reasons that I outlined. I am bullish on certain sectors of the equity market for the reasons that I outlined. You can buy fantastic businesses at attractive valuations. And overall, I think it's a period where up only is over, and investors need to get much better at their craft. You need to pick winners and you need to pick losers, and that's a lot harder than throwing darts at a dartboard and hoping for the best.
It's interesting. So I guess to sum up what you're saying right now, you really aren't even touching crypto. And if anything, with the market, you're kind of, well, I mean, with the market in general, if you're going to look at something, it's going to be something in the equities market, something that's actually churning a profit and has earnings, to what I'm understanding. Is that correct?
Let me clarify that. So, I'm bearish crypto as an aggregate, okay, right? And I'm bullish the equities market as an aggregate. But within those two markets, there are longs and there are shorts, right? So I am buying crypto assets actively. I spend a lot of time on Phantom because it's fun. But it's less than 20% of my portfolio. Like everyone thinks I'm a Phantom maxi because all of my videos have been on Phantom projects. And we can discuss why a bit later on. But so on Phantom, for example, there are fantastic projects like Beethoven, right? Which uses balancer tech, and by all accounts is a better mousetrap than Uni V2 dexes, right? And this team just executes and executes and executes. And they've currently got a market cap. I mean, it just oscillates so much. I think it's like 10 or 12 million at this point. And that's one example. Another example would be Oath, which I view kind of as a venture bet. What Justin is building over there is very interesting, and it resembles how you would build a company in the real world, right? And the way that guy thinks about business is very appealing to me. So I view that as a medium to long-term bet on that team building cool software. They're about to go cross-chain. I think he said that publicly. I hope I didn't misstep, but anyway, everyone's thinking about growing cross-chain now because people are looking for ways to generate revenue. So what I'm doing is I'm looking at projects on a case-by-case basis on layer ones where I think they have legs, and all of the layer ones have their issues, right? Phantom has their issues, they're well documented. We can just go down the list, but there is no slam dunk sure thing anywhere at this point. So, what I'm doing is a lot of work on these projects that I already know very well. And, I'm looking at these market caps and I'm talking to these teams and I'm trying to understand what this cross-trade world could look like. And I'm deploying capital that way. But at the same time, I'm shorting a lot of crap to kind of offset what I'm buying. Only because I'm not sure what happens over the next 3 to 6 months. The market could nuke very, very easily. There are a lot of things that could happen that result in the crypto market getting a lot uglier. And what I'm trying to do is position myself that if that happens, sure, I'm okay, right? And that's the function of having a short portfolio against the long portfolio. It lets you wait it out when you're not sure. Going and market buying something like Beats now and things similar to that and just holding it, is very risky because there's nothing to say that valuation can't be cut in half if something happens on Phantom or if, something happens to Bitcoin and that nukes down to 22K. So what I'm trying to do is just position myself in a way that lets me participate in a responsible way. If the market does nuke, my shorts are going to zero. So that'll be very profitable. And then I take the profits from the short and I go and buy more of the things that I like long-term. So, to answer your question, it's a very nuanced discussion and one that I would characterize at there are winners and losers. And now is the time where you can place some of these bets because the losers, right, are very, very obvious. And I'm not going to mention them, even though you want me to, because and here's a good point, right? So crypto Twitter is very interesting in that when you talk negatively about a project, you have very little upside and a lot of downside, right? And we can just go to what happened on Terra, right? You know, Nick Carter, who I think is really smart. I don't agree with him on everything, but he's a very thoughtful market participant, right? And he was on a podcast the other day. I think it was, you know, the block, Unchained Block or whatever. Laura Shin's
Block
podcast.
Works.
Yeah, whatever it was. And, you know, he basically said, you know, in a very genuine tone of voice that, you know, I should have been more vocal about Terra, but I just didn't have the heart to do it. I didn't have the energy to fight everyone all day, right? And when he said that, it really resonated with me, you know. And so talking negative about a project is there's a disproportionate amount of energy that you need to put in to kind of fight that cult mentality. And by the way, this is a weakness of crypto. This community, tribal, cult-like mentality of let's attack anyone that goes after our bags is not good for anyone, right? All it does is it slows down what is happening in crypto. But, you know, you or I can't change that. So I'm not going to mention the things that I'm bearish on and things that I'm short, but just to say that in a bear market, these things become very, very obvious as either fraudulent or extremely vulnerable to just going away. So my advice would be, you know, try and find situations where, you know, you want to be short things that in a down market are going to go down faster than your longs, and find things that in an up market or in a recovery are going to go up a lot faster than your shorts, right? So if your short is something that you think hasn't built anything, or there's a lot of fluff and a lot of hype, but doesn't really have anything anchoring it, it's not going to go up very quickly in a recovery because there's not much substance to it, right? But something like Beats that has a business and cash flow and revenue, and that's been proven, or something like Bitcoin or something like Ethereum, you know, we can go down the list of assets that we have a high degree of confidence that, you know, they're going to do well as in delivering on the promise that they presented at their inception, and then kind of short everything else, and you kind of balance it out. It's really hard to do. It's really hard to do, but it is the only way to protect your capital through multiple cycles. I've been doing this for 20 years, right? I blew up my first trading account as a 20-year-old in the year 2000 in the tech bubble, right? I was trading these tech stocks, made 7 figures from relatively nothing, didn't know what I was doing, throwing darts, right? And you know, took some money out and went and bought a piece of real estate and then lost the rest, right? So, you know, I've been doing this a really long time, and the #1 rule of the game is don't get hurt. Take as many bets as you want, take as much risk as you want, but make sure you stay in the game. And just assume everything is going to go down 50, 60, 70% at some point. The rule in the equity markets, Drake, was assume your portfolio is going to get cut in half. I think Warren Buffett has a famous quote that over the last 50 years, they've seen 50% drawdowns like 4 or 5 times. And that's that guy, right? And he doesn't really invest in risky, volatile assets. And he doesn't, you know, he doesn't buy the kind of degen type stuff we buy. So if the rule for equities is 50%, then the rule, you know, for the crypto market should be 80 or 90%. Just assume that's going to happen as a default, and then make your decisions around that. That doesn't mean don't take the risk, but always think, well, what happens if this thing gets cut 80%? And the easiest answer and the most obvious answer, and the one that's worked, you know, forever, is that you must have a balanced portfolio, diversified portfolio. And in my opinion, running a short, long book is,
right,
you know, the way to achieve outsized risk-adjusted returns. If you're long only, you'll beat me, right, in terms of your absolute returns. But let's try that over a 10-year period. You're going to get wiped out 3 times along that 10-year period, whereas I can just continue to make, you know, returns in a more steady, stable, and less volatile factor. So, you know, if you really want to dive into the weeds on how to run a portfolio, and we won't get into it here, just Google the Sharpe ratio. This is how hedge funds are assessed in terms of their performance, right? Not all performance is equal. If you can make 50% a year, but you get wiped out every 2 years, right? That's a lot worse than me making 18% a year and never getting wiped out.
Right.
It's very simple. So that's kind of, risk-adjusted returns, Sharpe ratio, running a long and a short book. There's plenty of information online. And I would encourage anyone that's serious about managing their money, regardless of how much money you have, to investigate these concepts. There are many ways of doing it. It's not the only way, but it's the way that I've found to work best for me.
Okay. So, we got like 9 more minutes and I'll have to start a new one. How do you start one of these shorts on some of these altcoins?
Yeah,
I know some of them, you have to be able to borrow these things. So where are you shorting some of these?
So it's hard, because you can't short all of these assets. Not like the equity market where you can open CFDs, you can do a bunch of stuff.
Yeah.
In the crypto markets, the universe of shorts is the universe of things you can short is much smaller than the universe of things you want to be long. So it requires a lot of work in terms of trying to find shorts that you can put on centralized exchanges with leverage, right? So, I'm a long-term bull on crypto, on equities, on real estate, on a lot of things, because over time, economic activity grows. I mean, just go look at a chart of the S&P 500 over the last 100 years, right? It's up and to the right. So, I don't want to short that, right? Primarily what I'm doing is I'm using shorts to hedge the portfolio. So if I've got $1 million long, right, on chain, on various, layer ones, farming and yielding and doing all these different things, right? I want a way to be able to hedge that. So I go to a centralized exchange, I pick a few assets where I can get, 4 or 5x leverage on, and I put down 200K, and then I get $1 million of short exposure to hedge my long book. So that's kind of how you do it. And it's kind of difficult. And thank God for these centralized exchanges having very lax listing requirements, where, they're listing a lot of crap that gives us the opportunity to go and put these trades on. But it's very risky business, because some of these things that, in my opinion, are crap, can easily triple, because Elon might tweet about it, or, they might create some kind of situation where it pumps. So it's very, very hard to hedge a crypto book, even remotely effectively. I spend a lot of my time, working on that, because it's very important to be able to give me that protection, because I expect at any given moment my longs to drop 50, 60, 70%. I'm not surprised. I expect it. I don't know when it's going to happen. I just know it will.
Yeah, I think it would be interesting when you're shorting it, especially if you get like that green candle that liquidates you and then it completely tanks. That at that cost you lose your short and you're still long. So I don't know. I'm not an expert.
It's really hard.
Yeah.
It's really hard. It requires a lot of capital, right? So when that happens, let's say there's a God candle and that short gets liquidated. Okay, cool. You lost that money. You still need to put the short back on.
Yeah.
Maybe it's not that asset, but you still need, I still need to have that confidence that I am prepared for some kind of, a cataclysmic nuking event. So it's very hard. It's super hard to do effectively.
All right. So that's interesting. So what would you, what is your checklist for finding the next big thing? If you are buying something?
If you're talking about next big thing in terms of, a macro wave, like, in terms of a, large theme, I try and learn as much as I can about those narratives as early as I can. So, maybe it's GameFi, maybe, it's move to earn, or whatever the new thing is. I don't dismiss things offhand. Right? I'll go read about it. I'll talk to a few people about it, and I'll be aware of it, just so that I'm in a position to objectively synthesize information as it comes out on that new thing. And at some point, if there's a bet to be made, I'll make it. If it's in terms of specific projects, like what would my checklist be before investing, that's a lot more work. And there's no specific checklist that I go through, but there are things that I will, I won't invest unless I have access to certain things, right? I won't buy anything unless I've read the documents cover to cover, right? And sometimes multiple times, because I don't mind admitting that I don't understand them all the first time, because most of these docs are terrible, right? They're not written for users. So number one, I'll read the docs back to back. Number two, I'll join the Discord and start asking questions about things I didn't understand in the docs. And I do this for two reasons. Number one, I want answers to the damn questions so that I can understand what I'm reading. Number two is I want to use that as an opportunity to gauge the level of, there's no nice way to say this, but the level of sophistication and education of that community that supports that project, right? And I use that as an indicator as to the strength of the holder base, right? Everyone says community, community, community. That's not really how I think about it. I think about it in terms of the holder base, right? If you go in there and you ask some questions about the project and you get a very thoughtful 3-paragraph answer from someone that takes the time to actually explain this complex concept to you, and that person isn't part of the team, right? Now, the information that I just received is that there are members of this community that actually understand what they invested in. So they are less likely to be fickle around price movements, and they are more likely to hold this token, for a longer period of time. The opposite of that is if you go in there and you ask this question and you get these one-word or one-line answers that don't make sense, and they're obviously from people that don't know the answer, right? Or God forbid, you ask a question around the sustainability of their tokenomics, and they say, stop fudding, right? And that's their answer. Like, you're laughing, but guys like me use that as information. They think they're being funny.
I'm laughing because that happens to me all the time. Stop fudding. And it's like,
so they, whatever. Yeah. And you're like, what? I just asked, about this thing. And so they think they're being cute and they think they're being funny, but all they're doing is smart people like me and you probably move on because there's another 800 projects in our queue that we want to look at. And then, you kind of distill that holder base into people that don't know enough about the project, don't understand what they've bought, and are likely to be very fickle and run for the exits at any kind of deviation in the plan. So, so that's part of my process, is engaging in the Discord and get the answers I want, but also gauge the level of, understanding of the community, right? And saying this is going to go to the moon is, they think, hey, that's positive. Don't be negative. It's actually negative to people like me, right? Discords have gotten a lot better over time because, people realize this. And then, I talk to the team, and the reason I started the YouTube channel, February 8th, nobody knew who Nick Drakeon was, right? I was just another nobody. I was a lurker on Twitter, and I'd be in these Discords. I'd ask a thoughtful question, respectful, and I'd get stop fudding, and I'd ping, the team members, and no one would respond to me. And I couldn't get the information that I needed. So the impetus for me creating the YouTube channel was, let me just show people that I'm a smart guy. I know what I'm doing. I'm a serious investor. And I want to learn about these things just to give me access to the information that I couldn't get. And that was the impetus for it. That's why I don't do paid promotions. I make no money from the videos. Not that I have any problem with anyone doing that, provided they disclose it. That's cool. But my business is managing my money. There's no amount of money that a project can pay me to make a video about them that is material to the capital base that I'm managing, right? What I'm trying to do is get information that I can use to make better investment decisions. So, your question was checklists. So I go through that. And then, now that I have access to these teams, I can get the information that I want a lot faster. I can understand their roadmap, and that really kind of pencils out what I need before I go further. Then I'll go in and maybe I'll build, a financial model trying to predict what revenue looks like, and how value will accrue to the token. I will, all of the kind of flow charts that I put in my videos, I make them for myself, right? I can, they're a bit more complicated, the ones that I use for myself, but, I try and visualize, what is this thing? What is this business that they're trying to build? Where are the incentives coming from? How is the value captured? What is the competition? And then I start analyzing this thing the same way that I would analyze a company that wants private investment or a company in the public markets. So there's a long process I go through, and I won't buy anything until I've done all this. I don't buy and then do the work, which is what most people do in crypto. I do the work and then I'll buy something.
That's interesting. I especially like that comment with the Discord and the community. I can relate with that. But what you added on to there, being able to have a community that can talk intelligently about the coin is important, because they aren't in theory, yeah, some of them are there for the money, yeah, whatever. But if someone's there for the money and the money is quickly going, they're going to exit the door. That's typically how something rolls. You want to have someone who has conviction in the project, just like you would. So that's pretty interesting.
Everyone's there for the money, but the person that understands what they've bought is likely to hang around, number one. Number two, having 5 people or 10 people in that Discord, that can answer those questions at a high level just means that now there's more intelligent information out there about the project, and people like me might now participate. So you end up, widening the universe of potential investors to your project, and stacking the deck with people that actually understand what they're buying. So I think great things happen. And my advice is, if you're launching a project, go find really smart people that can communicate and pay them a lot of money to be a mod. It's the best money you'll ever pay.
Right. No, I agree to that. I definitely agree. So I want to ask you, I know your time is important. I want to ask you 2 last questions. You got to go get those martinis, right? I'm kidding. I'm kidding.
Yeah, I've got time.
What would you contribute most of your success to?
Look, I've been lucky to have been in the right place at the right time, both in the poker space, in the e-commerce space, and now in crypto. But I think, look, poker's the best education I ever got, right? And I went to law school. Really developing that skill set to think critically, to think analytically, to kind of have independent thoughts and question everything. These are fantastic skills to have in any industry at any moment in time. So I think, a lot of my success as an operator in business, as an investor, in all of the markets and now in crypto, really, I got to contribute a lot of it to my experience, being around poker. It was the Wild West. There were home games that, I would walk into knowing that there was a 3% chance that I'd get robbed, right? But I still walked into the game because it was such a good game that I could win a ton of money. Provided I was convinced that if we got robbed, I wouldn't get killed, I'd walk into the room, right? Very similar to investing in a DeFi protocol where you don't know if you're going to get rugged. You don't know if you're going to get hacked. So kind of my mentality, from those days has always been, don't trust anyone, do the work on your own, do a lot of work on your own, build conviction, and then bet big, follow your conviction. Everyone says, I've got conviction because, I've held XYZ token for the last year and a half. And it's literally a fraud. Like, that's not conviction. Like, conviction is actually doing the work, understanding what you've bought, and then sticking to your guns as information, follows through. So, there's a lot of things that I would put into that bucket of helping me do well. I'm kind of desensitized to losing money because of poker. So I can take the losses. Like I'm really desensitized to it. I can lose a lot of money and it won't affect me. I'll pour myself a whiskey, I'll sit on the balcony, and tomorrow's another day. And that's really hard to do. And I wasn't born with it. I kind of, developed that thick skin again through poker. So there's a lot of things that you can kind of point to in your life. But overall, I would just say life experience, life and business experience, being in situations, being knocked down, getting back up, trying to work out, who's full of it and who's not. All of these things that, you read in all of these, what is success made of type books. They're a thing.
Oh, that's really interesting. Poker is, I guess you can say, a gateway drug for a lot of people into crypto, whether it was accepting crypto or playing on these online poker rooms using Bitcoin, or learning the alpha and learning the trading skills and the quick decision making that you need to make in poker and relating that to crypto. That's pretty cool. I was horrible at poker. I played maybe, I don't know, a handful of 100 games, 150 games just for fun with my dad. My dad's really good at poker, but not so much for me. I was just like, yeah, I'll play the quarter pushers. Bye.
Well, it's a fun game, but just to give you an insight, like, that wasn't fun for me. Like, I was playing 12 tables at a time, right? 8-10 hours a day online. After those sessions, I'd analyze the hands. I had spreadsheets. There was software that we used that we would literally go through and analyze every hand we played and try and work out, why did this guy crush me today? Like, that was my job. I took it very, very seriously. The same way that I would if I'd be a trader, working at an investment bank, or if I was running, a business. So, going back to doing the work, we used to joke, poker's a hard way to make an easy living. Everyone thought it was an easy living. Absolutely not. It was extremely difficult. You're paying for a lot of money and you're on your own, right? It's really hard to lose 20, 30% of your net worth in a night and then get up the next day and have to do it again. So, that experience set me up very, very well later in life, to handle adversity, to handle losing money, to understanding my emotions and when I'm playing well or not playing well. And there's a lot of self-awareness, that goes into that. So there's a lot of, parallels to the skill set that you need in poker and being a good trader. In fact, some of the guys that I played cards with back in the day, they're market makers and option traders at some of the biggest investment banks in the world right now, because that's how their mind works. So anyway, I digress. Enough about poker.
What have you learned in crypto, in the markets and equities, and anything in general that you would have wished you knew before you stepped into it? Let me give you an example. When I started into cryptocurrency, I started by watching like BitBoy, Crypto Banter, Box Mining, and they would tell me, they'd say, hey, buy this altcoin. I'd buy this altcoin and wham, I'd roast it. That's the whole reason why I started the channel. But I kind of learned from the School of Hard Knocks. But what is something that you've learned or knew that you wish that you know now that you wish you would have known when you first started?
Yeah, what you've experienced early in crypto, I experienced, but just not in crypto, right? Earlier in life, whether it was in the equities markets or whether it was playing poker or anything like that. So, trying to sift through the noise and curate, information and synthesize that information is an important skill anywhere. So, all the mistakes you made, I didn't make in crypto because I'd already made them earlier in life, right? And I don't know how old you are, but, I'm 42 next week. Actually, I'm 42 on Friday. So I've been at this a while. So I've already, made a lot of these mistakes, which, put me in a fantastic position when crypto came around, because I had a head start. I knew how to manage. I've never been liquidated in crypto or in the equities market since I blew up the account in the year 2000 as a 20-year-old. Right. Because poker taught me, how to manage my bankroll. I busted my bankroll many times in poker, but, I've never been liquidated. So that's a skill set that you will develop over time if you haven't already. But if you throw 21-year-old Nick into the crypto markets, it's going to be an absolute mess, like it is for a lot of other folks in terms of managing that risk. So I think, your question was, what do I wish I knew earlier, specifically in crypto? And because I already had the trading experience, investment experience, the recognizing, the fluff experience, like I had all of that. But what I didn't have, and what I was a little late on, was spending time understanding, the technology around, behind, what makes some of these blockchains work, right? Even just the technology of a blockchain. Why is that a better mousetrap for some of these systems? How are they secured, right? How are they resilient? And that's something that took me a while to understand, even after, early 2020, where I already understood why Bitcoin was special and why it might be something. DeFi summer happened, and that happened real quick. So, I'm kind of trying to trade these coins, and I'm getting airdrops, and there's all these things happening. And I wish I spent more time understanding tokenomics, understanding, the difference between Balancer and Uni V2, understanding, how some of these business models and these, systems were designed and operated, because that would have put me in a better position in late 2020 and early 2021 to be a lot earlier than I was on some of these layer ones. And I was really early, right? Most of the big layer ones, the AVAXs, Luna's gone now, but, Luna and Phantom, like I bought all of these, early to mid 2021. So it was really early, but I could have been 3-6 months earlier if I had understood some of the things that I didn't. So, that's a mistake that I'm rectifying now around what we discussed earlier, with spending a disproportionate amount of my time understanding what the hell is going on. And if there's a new chain, a new layer one, a new layer two, some new technology, a new, business model around a lending market, or a new technology around an AMM, like I'm in there trying to understand it, because I know I'm not going to get it straight away, because some of this stuff's really complicated. So yeah, for me, it would be, really understanding the back end, and I don't mean the tech in terms of, coding or anything like that, but understanding the system, getting a flow chart of the system and understanding how value flows through it. So that's how I'd answer that question.
It's interesting. And that's also a really good point to make. A lot of people are always like, what's the next coin, or what's the next project to look at? Look at something disrupting the space, or taking something at a different angle, and doing the best you can to understand it and be able to explain it to someone, or explain it to a 5-year-old, is what I'd take from that.
Yeah.
So go ahead.
Go on. No, that's fine.
No, go for it.
No, I was just going to say, because, that knowledge compounds, and it compounds quickly. And like people starting out now, say with 10 grand, are focusing all of their time reading technical analysis books, and watching 8 hours of YouTube videos, trying to find the next 10x. And that is not what's going to change your life, right? What's going to change your life is if you spend the next 6 months ignoring that 10K, right? Work at something to try and raise more capital for yourself, but spend all of your spare time understanding these systems, because they're still going to be here in 6 months' time. There'll be the new thing then. And at that point, you'll have more knowledge to be able to say, here's 10 situations. 9 of these are obviously flawed, but this one here, I can't really poke holes in. And then you make your bet on that one. And then your your likelihood of success in that situation is much higher. Whereas if you tried to make that bet today, you look at those 10 projects, they all look very, very similar. And you only end up buying the 1 or 2 that, you see more of because influencers or crypto bank or whatever right? You're buying it for the wrong reason because you don't understand the differences. But if you spend all your time trying to understand these systems, at some point in the short term, you will have enough knowledge to be able to pick the winner out of the bunch. And that's when you should deploy your capital.
That's really important, man. Smart guy. You're a smart guy. And so
Thanks.
any closing thoughts you want to leave for the viewers?
Look, no one's going to really pay attention and everyone's still going to degen. But I just want to double down on, we mentioned it a few times in, the variable of success, right? Over a tail duration, and in crypto, let's call a tail duration 3 to 5 years, which is kind of insane, right? But let's say, you want to turn, you want to get really, really rich over a 3 to 5 year period, right? You don't need to make a huge bet today, right? You can make a huge bet in 6 months or 9 months or a year or 2 years, right? And then you can still make silly returns over a 5 year period. So what I'm trying to get people to do is stop focusing on what to do with your 10K or your 50K or your 100K if you don't understand this stuff. Put the money away, right? Go put it in Bitcoin or put it in ETH or put it in something that you don't need to look at every day, and spend all of your time learning about these systems, learning where to get information from, learning what sources of information you should fade, right? Because there are positive sources of information which you should listen to and try and understand. But conversely, you've mentioned some of them. There are sources of information which is, or you should start to understand that that's not going to work out well. And now you have the basis of a system of synthesizing information, both positive and negative, that can help you build a portfolio, right? Everyone's trying to turn their 100K into 20K. Let's say you work your butt off, right? And you turn your 10K.
Yeah, I was going to say 100K to 20K. I don't think I want to do that, but that's what I'm doing.
Yeah. So, but let's say you got 10K and you're like, I'm going to be the best trader in the world and I'm going to 5x my money. Yeah, that's really hard to do. This year, I'm going to 5x my money and I'm going to go from 10K to 50K or 60K, whatever amount you want to pick. That's, 5x to define that return. Let's say, okay. And you're going to spend 8 hours a day, right? Watching YouTube, reading docs, watching Drake's videos or my videos in Discord, and you're going to really do the work. And at the end of the year, you actually succeed, right? You probably won't, but let's say you succeed and you have a 5 or 6x return. You made 50 grand that year. You can make more flipping burgers, right?
That's a good point.
So, the idea is that trading a small capital base to try and make real money is not the best use of your time, especially if you're young and you're smart and you know how to digest information very, very quickly. The best thing for you to do is to spend that year, right, learning as much as you can about these systems, right, becoming a mod in a Discord for a project that you like. So now you have an in and you can get information and you can be kind of at the forefront of that innovation. And you do that, you don't even need to do that for a year. You do that for 6 months and you're an extremely dangerous human being because now you've got information, you've got a network, you've got contacts, and now you can go deploy your capital, right? And if you lose that capital, so be it. The knowledge, the skills, the connections, the network that you have accrued don't go away. But if you just sit there lurking on Twitter and you try to make your 10K, 50K, and you don't create a network, you don't build any skills, you don't earn any spare income, being a mod or working as an intern somewhere, you don't do any of that, and you lose your money, you're back to square one. You haven't gained anything other than some misery. So that's kind of my parting thoughts. And no one's going to listen to me, but if one person out of 20 does, a 5% strike rate, it's worth saying.
That's a really important note to end it on. The biggest thing is find something you love to do and enjoy doing. That way it doesn't feel like you're working a day in your life. Trolling and looking on Twitter, I mean, if you enjoy doing that, great. I just don't find any enjoyment for that. My enjoyment is teaching people and bringing value to others. And I mean, sure, you may get wrecked on some things here and there, but there's valuable lessons you learn in that. And being able to learn and use a experience where you lose or you win and use that as a teaching lesson, in my opinion, is really invaluable. But yeah, those are just my thoughts. Nick, man, I appreciate you jumping on the channel. Super smart guy. Keep doing what you're doing. I want to see more of your YouTube videos. Speaking of YouTube videos, where can we find more about you? I'll leave a link in the description below to your YouTube channel, but like, where can we learn more about you? Where can we get some of your information? Where's the best place to find you?
Yeah, I mean, just on Twitter, it's at Nick Drakeon. There's a link to the YouTube channel there as well. Okay. That's it. That's what I do. I'm pretty active on Twitter. I haven't made a video for about a month. I got married, and went away for a little bit on a trip. But I'm working on a few things now. It's just hard because it's with the markets the way they are, there are so many opportunities that I'm spending all my time deploying capital and trying not to get wrecked like everyone else. But the videos are fun because they force me to really dive into a project. And more importantly, it opens up doors for me, right? So I can talk to people like you. I can talk to some of these projects. I'll be doing more of them this month. But just at Nick Drakeon on Twitter.
Sweet. All right, I'll leave your YouTube link in the description below. And I always end all my videos with a wisdom one-liner. This is going to be in Proverbs chapter 14, verses 15. This is randomly chosen, and I think it actually relates directly to what we just talked about. The simple believe anything, but the prudent give thought to their steps.
Not bad.
That's pretty good. It fits. Not bad, Drake. Perfect. That fits perfect, dude.
It is, and it's true too. It also happens to be true. But look, I appreciate you having me. I watch some of your videos. I like, first of all, I like the jerseys in the background. I like, you differentiating in that respect. And, I like what you do. There's no fluff, very straightforward, and a refreshing change to some of the rubbish that's around these days. So keep doing what you're doing. Let me know if I can help. And I thank you again for having me as your guest.
I appreciate the kind words, sir. And it's an honor to have you here. Thank you.